What would be the most effective and efficient use of financial resources that the government might gain through selling of the minority part of the electric enterprise shares, given the manner in which the global financial crisis is impacting Montenegro's economy?
The recapitalization and partial privatization of EPCG, in the end, is a lifeline for Montenegro's economy. Assuming that things go well and a qualified strategic investor is found, the consequences are manifold, essentially three. First of all, from the partial privatization part, the government would receive revenues which it could use to fill the financing needs in its budget. Secondly, from the recapitalization part, the power utility EPCG would receive funds that it could use for the necessary investments in infrastructure needed to make this company profitable or more profitable in years to come. And thirdly, if the minority shareholders and the investment funds are able to sell their current holdings of EPCG, that would create an additional injection of capital that probably is going to feed back into the banking system, repaying debts, increasing deposits, and easing essentially the liquidity problems that we're facing in the banking sector. So we will now see where things are heading, but generally I think this is one of the most positive developments that we can currently record for Montenegro, certainly in the short term.
Can you explain for our viewers the difference between a recession and the crisis and the likely consequences of each one?
Even without the turmoil that we're currently witnessing in the global financial markets, we probably would have seen a market slowdown in economic growth in 2009. And as you know, stock market prices have peaked during the third quarter of 2007 and real estate prices about a year later. The capital inflows from foreign direct investments, which were largely concentrated on real estate and tourism development projects, probably would have shown a slowdown as well. Certainly, private sector credit growth rates, which were about 140% in 2006, 180% in 2007, partly following the prudential measures undertaken by the central bank in late 2007, would have continued to come down it was foreseen to 40%, it came down a bit more due to the crisis. That is, even without the financial crisis, this year probably would have been one with lower growth or even negative growth rates. And this is where the definition of a recession comes in. Generally a period with at least 2 consecutive quarters of negative growth. This is normal in a free market society, and typically economies get out of this without having to take a great set of policy measures to counter that. A crisis, however, goes a whole lot deeper and touches upon structural issues, generally, or in this particular case for the Montenegrin economy. Following the market decline in prices, world market prices for raw materials, for example, except gold, the crisis has a clear impact on the sustainability of, say, the heavy industry sector in Montenegro. There are, as a result of a crisis, very specific demands on governments, but also on every other party involved, to find a response to this crisis, one which will take advantage of the opportunity that is inherent in any crisis. In reassessing what are really the priorities, what is the essence of the growth potential, and take steps on that basis.
Last week, the World Bank representative stated that the Montenegrin economy is not likely to escape falling into a recession. In your opinion, what might be the best mix of economic and social policy that the Montenegrin government ought to implement in order to avoid this from happening, all the while keeping in consideration that interconnectedness of our with the economics of the region?
And undoubtedly, the economic news that we've heard recently, whether globally, regionally or domestically, have not improved at all. The various bailouts and rescue packages, notwithstanding that we have seen, including in the most advanced economies, the confidence in and among financial institutions has not returned. As a result, liquidity remains constrained and debt markets remain tight. Montenegro is a small open economy, particularly one that has been so crucially dependent on external capital inflows as an engine of economic growth, is particularly vulnerable to the effects of the changes that take place externally. So we are going to see that foreign direct investments will decline. We will see how sharply, but certainly they're going to decline. The ability to borrow externally, particularly by the private sector, has all but vanished. The banking sector at this point seems unable to close the gap between gradually declining deposits and credits, implying that it becomes really, really difficult for banks to extend loans to the private sector. And all of this clearly has implications on the private sector. So in the absence of unforeseen and very positive events, it is probably true that this year will be very, very difficult, and there's a good chance that we'll be facing a crisis. All of Montenegro's key sectors, whether it is industry or tourism, construction or transport, seem to be affected. In response to that, the government has essentially three options. I mean, given that Montenegro is a small open economy with a high import content, and given the existence of external financing constraints, it cannot, like other countries of the region, have similar stimulus packages that we've seen in industrialized countries. It is a blunt policy instrument. It won't have the effects, and certainly it cannot be financed and then just will leave the country with higher debts. But what it can do is, first, of course, continue to seek as many foreign direct investments as possible. They might be considerable, they might be less. Secondly, to continue efforts in strengthening the financial sector, including by guaranteeing loans from international bilateral and multilateral institutions for the banking sector, which they can on-lend. And recently there has been quite a bit of success in doing so with the credits from the European Investment Bank and the KfW. And thirdly, to focus policies in areas to strengthen public institutions, to strengthen the enforcement of rules and regulations, essentially to improving the overall environment for the companies that are already present in this market. Granted, this is not a particularly new policy, but clearly one that not only will help to make it easier and then provide support to the domestic enterprises that are currently operating in Montenegro, but it also supports the other key objective that Montenegro has, namely European integration.